Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, we're talking about that credit crunch. You know, the banks, what they're doing. You've heard about Wells Fargo. You've heard about B of A. Well, we're going to talk about it some more because there are effects. There's a cause and effect of this because there's going to be a credit crunch. That means you have to do something about your credit right now. Get in position because it's going down. So we're going to talk about it today. And welcome to Foci Optics. Check. Stop struggling now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. And I want to thank you for being here at the Stop Struggling Now YouTube channel page. And of course, I have to talk about please share the videos. We're trying to help thousands, if not millions of other people. And we have the join button over here on the right hand side. This is how you become a member of the channel, and you have the icon next to your name when we have our live chat room. And on the Wednesday night lives, the chat room is for members only while everybody else can watch. And then, of course, they receive special messages under the community tab specifically for them. And they receive 1 or 2 videos per month specifically for them. So please join the channel and become a member of the channel. Now, let's break it down, ladies and gentlemen, because I'm sure you have heard of this right here. Wells Fargo tells customers it's shuttering all personal lines of credit. This was at the beginning of July. Now, some people started freaking out. There's talk of all of this all over the internet. Well, SSN Nation, you guys already knew this was going to happen. We talked about that they're going to reduce your credit. We talked about how they're going to increase the requirements to get credit. Why? Because whenever there's going to be inflation, which is happening right now, they're going to have to increase the interest rates on loans, on any type of lines of credit. They don't want to take the risk because of the COVID situation. So therefore, that's what they have to worry about. Now, if you were a bank, what would you do? Especially when you don't have people depositing as much as they should be. They're putting it into crypto. They're putting it into gold, silver, precious metals, or they're putting it into investments that return money to them, since the bank's giving you pretty much no interest. So therefore, you might as well invest your money elsewhere. So of course, downturn, people aren't working. This is why Wells Fargo had to start considering this. But what you may not have known is that they're not the only ones. And I want to show you something, because people might be sleeping all the time. See this here? Big banks cut back on loans to small businesses. This right here is from 2015, just to give you an idea. So this is small business, the other one is personal, but reducing of loans always happens. I'll have links down below in the description to all of these articles so you can go read them yourself. There's a cause and effect when you loan money, when you print money. So I want you guys to understand this, and we're going to talk about how you can get some credit right now and what to do to make sure you stay up on it. A lot of you who's been here know I've talked about a lot of these before, but we're trying to get you credit from fintechs. We're trying to get you credit now based on other criteria other than your credit score, because that way you may not lose your credit like what Wells Fargo has done. Chase has done it. All the big banks have done it, just not as in an uproar like Wells Fargo did with a big announcement. The banks have been doing this over the last 6-7 years, It's just that they didn't just go, we're shutting down everybody's. So just letting you know that. And here's the 3 things to keep in mind. If your credit limit was recently cut, what can you do to get your credit limit increased again? I figured I might as well just show you the article. I'll have it down below from CNBC. It's pretty simple. You know, card issuers can change your credit limit without notice. Okay, of course, you know that. Your limit is more likely to be lowered if your card is inactive. So, you know, you don't use your card. Remember, a lot of people have 5, 10, 20, 30 cards, and they rotate them around every few months of use. That may be the reason why some people are having their lines of credit reduced, because you're not using it enough for them to carry and take the risk in case all of a sudden you do plan on using it and maxing it out. So these are the things that you have to remember. Now, here's the thing. You can always call up, ask your creditor to reconsider. That's what is an option for you in this case. And then, of course, they have the bottom line, you know, because they're going to be concerned about the future loan credit approvals. But that's fine. But we don't want to have hard inquiries right now. Okay, so what I'm about to show you is a bunch of places that you won't have to deal with hard inquiries. Big U.S. bank cut loans to record low. Again, notice the word again as deposits jump. This is from Bloomberg in April of this year. 25 biggest U.S. banks reduced their loan holdings by 8%. Okay, so you guys have to understand what's happening here. This is going to affect you. This is going to be a situation where you thought you had a 740 and you generally have a great score and you'll be able to do that, 740 and up. This might turn into where you need a 760 all of a sudden to get the preferred loan rate for whatever you're buying. You don't want to be in that situation. So therefore, if you can bypass and be able to get loans or lines of credit from a different source, wouldn't that be much better? Again, there'll be a link down below. Now, I just want to go over this real quick because I wanted you to understand when there's inflation, you can't be in denial. When they're printing money, which they're still going to do because there's going to be an infrastructure bill, there's going to be more stimulus money coming. This is a recipe for why they cannot start extending money. Keep in mind, I'll show you this right here. This here. The combined loan to deposit ratio now sits at 53.9%. That's nothing major, but this is the major part. The lowest reading in 36 years of weekly Fed data. Okay? That is not good. That means people are putting their money elsewhere. And how the banks operate, they have to get deposits, and they use that 9-to-1, 10-to-1 formula and loan out based on 10-to-1. So if they have $1,000 in the bank, you deposit $1,000, they can loan out $9,000, $10,000 on their books. So they can write a loan to somebody for that combination of $10,000 or all at once $10,000. So that's why they need more money in deposits. Therefore, they have to increase the interest rates. So it's a combination. So therefore you have it. Now, let's get into some things, that options you guys already know about. If you're new here, you may not know about it, but here's the Tomo credit card. Again, you see it. No interest or fees, no credit history required, weekly auto pay. Yes, even though it's like a net 10, net 7, net 14, like an old charge card, nonetheless, a credit line, and they report. So that helps you without being without getting a hard inquiry, and you're still going to be reported. I'll have a link down below to see if you qualify. No credit check, no hard inquiry. Then you're going to take yourself over to Benjamin Finance, which is another fintech. You're going to join the wait list. All right, the pretty metal card's not the thing. It does not matter. But again, a way to build your own credit without having to deal with the banks. It's a fintech. And then X1, which I guess I didn't have it on the screen. X1 is similar. It's just like them. Join the wait list. The link's down below. Now, you want to build your credit still. There's something called Grow Credit. And you guys have heard me talk about this before. and other videos. Grow credit actually works where it pays your Hulu's, your Netflix, your Amazon, $15 or less. If you have a monthly payment on any of these services, subscription services, then they will report to the credit bureau. All right? If you have $15 or more, then they charge you a fee. That's Grow Credit. A link is down below for that. No credit check, no qualifying once again. Then we have Extra Credit. And again, you go apply. It's a debit card. How this works is just like your bank debit card. This is beautiful. Another fintech idea. You charge your card, the extra card. The next day, they debit your bank account. So but they report to the credit bureau. That's the beauty of this. All right? So that helps you out a lot for building your credit. And then I haven't talked about Avant.com. This here, they do check your credit, but here's how it works. First, they do a soft inquiry. Then after they do the soft inquiry, it tells you what you're eligible for as far as whether it's a personal loan or credit. And they'll tell you the limit and all that. Then if you accept, they do a hard inquiry. So it's almost like you can go here for free and see what your credit limit or personal loan they'll give you, and then you can decide afterward if you want to accept it. And then if you accept it, it's a wrap. Okay? So I just want to let you know about that. Now, we'll go to the tried and true in case somebody's still here trying to build their credit still. Then we got Credit Strong. And if you're trying to do business credit, you can see at the top, they started their own business credit with Credit Strong. This is almost like a savings program. They report to your personal credit, and now with the business, they report to a business credit. So you have both, two birds with one stone with Credit Strong. Down below in the description, you can find out more about it, or you can search the channel for other credit videos or put in Credit Strong when I did those, talked about them before. Self lender. Again, most people are familiar with self lender. It works same as Credit Strong. So therefore, self lender, it's a savings program. You pay into the savings program. They report as an installment trade line, just like Credit Strong, because it's a fixed amount every month, but it helps build your credit. Not to get credit, but it'll help build your credit. Helping build your credit means now you're going to be more credit worthy to receive loans. In this day and age, what's about to happen, the credit crunch is going to come down, and it's going to be pretty hard for somebody with marginal credit, meaning a 600, a 640, a 680, may not be able to get any type of credit, loans, lending, anything. And if you're starting a business and they start even getting more into the personal credit, that could be a problem for a lot of people. So now they have you two ways. But of course, business credit, we can always work around, because you can run off your business credit, and there's ways that you can get business credit, just like the Credit Strong. You can start building a credit profile for your business without your personal credit score. And speaking of that, here goes another one for business. Now that you held in here this long, here goes business. Capital on Tap. Somebody on the Friday Night Live, I won't mention his name, you'll have to go look at the chat. They got a $10,000 credit card with Capital on Tap. Another one that is specific for startups and small businesses. All right? You can find out if you qualify or are approved, like they say here, 2 minutes. All right? That's how simple this is. So I want to just go to something that I mentioned, and we'll get out of here with this video, and we'll end it. But it was Credit Crunch. And of course, I have the Investopedia terminology here for credit crunch. Occurs when there is a lack of funds available on the credit market, making it difficult for borrowers to obtain financing. That's what I meant by credit crunch. All right? And it says this happens in one of three scenarios. When lenders have limited funds available to lend, meaning they don't have as many people putting money in the bank. They have people going out here buying gold, silver, precious metals because of inflation. They have people going out here putting money in Celsius Network, buying crypto, because we're earning interest every day on our crypto, right? So why would you put your money in a bank which gives you 0% or 0.1% or 3%, whatever it is? It does not matter. Why would you put your money there? So they're missing out on all these people, and now they're saying, wait a minute, we don't have enough money to cover if people start defaulting. This is the credit crunch I'm referring to, and this is why they're going to make it harder for you to get loans, or more costly, because now they need to have people that they know are A-graded people who are going to pay on time without a doubt. So they'll raise the credit score requirements for everything, including credit cards, including cars, including uh, loans, all of it across the board, because they don't want the 2008 situation to occur all over again. So hopefully this gets you guys on board to understand what's happening out here in the real world, and you're making strides to make sure that you won't be caught up, just in case. Let's put it like it is. Emergencies do happen occasionally. So therefore, sometimes credit may be necessary. So with all that said, thank you for watching. Thank you for being here. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. And that's why we still have to stay on building credit in 2021, except we're doing it a different way. So please, down below in the description, use all the links necessary to help you out. And then I'll see you some other time. And with all that said, keep your head up, keep moving, and I'm out.